Many SMSF trustees are also small business owners, meaning that they can take advantage of aspects of the super system like the CGT small business concessions. Linda Bruce from Colonial First State is with me to discuss this further. Welcome, Linda.
Thanks, Darren. Thanks for having me.
Listen, can we just start right at the basics? Can you just give us a brief summary of what the CGT small business concessions are?
Sure, Darren. At a very high level, the tax law offers four incredibly generous concessions. The first is the most powerful one, 15-year exemption. And the second is the 50% active assets reduction. And the third one is the retirement exemption limited by the $500,000 lifetime cap from a tax law perspective. And the last one is the rollover relief. That's for small business owners wants to use the sale proceeds to purchase replacement asset. So at a very high level, those are the four exemptions that's available to our small business owners.
Okay, fantastic. Now, an individual must be eligible to use the measure. So what are some of the qualifying rules they have to take into account?
I'm glad, Darren, you mentioned about the individual because, of course, the disposers could be entities too, and the rules can be complex. But for the purposes of today's discussion, let's focus on the individuals. There are various conditions they must meet, two basic conditions to be able to use any of the four concessions. The first one is a 6 million net assets value test, and the second one is the active asset test. So it must be active asset, it can't be a passive asset. And in addition to the two basic rules, if the individuals are selling shares in the company or interest in the trust, the rules can get quite complex. Let's just not go there today. So those are the two basic rules. And then if the individual disposer wants to use any of the four specific concessions, there are further specific rules relating to the 15 exemption or retirement exemption that must be met. For example, to be able to use a 15 exemption, the individual must be 55 or over and be retiring. And also to use the retirement exemption, on the contrary, they don't have to retire, but there's a lifetime cap of $500,000. As you can see, the rules are just so confusing and complex.
Yeah, definitely quite intricate. Now, why would an SMSF trustee look to use these concessions?
For tax purposes, it's incredibly generous. So usually, ordinarily speaking, when we sell a CGT asset, we needed to pay capital gains tax. Who likes that, right? For a small business owner, if they can use any of these concessions, in particular the 15 exemption, any of the capital gains accrued since the inception will be wiped out. We don't have to worry about this, paying any of the capital gains tax on selling the CGT asset, selling the business. When the trustees are retiring, for example, planning for the retirement, it can just be incredibly generous. And that's not the end. Those business owners, they might not have accumulated a lot of super. They're busy with running their business, etc. When they sell the business assets, planning for retirement, there's an incredibly generous cap, the lifetime CGT cap, that has nothing to do with the non-concessional, concessional caps. They are very small. This cap at the moment is $1.65 million. That's just incredible. That allows the individual, relevant individual trustees to put the money into super from the sale proceeds and utilizing this contribution cap. So from tax perspective and super perspective, they are just incredibly generous.
All right, there's no doubt you've just laid out the case to say that they are incredibly generous, and of course they are. So on the other hand, are there any reasons why an SMSF trustee would not want to use these concessions?
There are situations they may not want to. One classic example would be they are selling their business, but that's not the end. they're actually buying some other business. They actually want to use the sale proceeds to purchase a new business. And in that situation, they want to minimize the amount they have to put into super. There are situations they have to, but they don't want to because they might need to use the proceeds for other purposes, buying a new business, or even just buy another lifestyle asset. These might be the situations you do not want to use the sale proceeds to put into super.
All right, Linda, they were fascinating talking points. Thank you very much for sharing them with us.
You're most welcome, Darren. Thanks so much for having me.
Linda will be delivering a more detailed presentation on this topic at the SMSF Professionals Day 2023, co-hosted by Self-Managed Super and Accurium. This year, the event is returning to a 3-city roadshow format, kicking off in Brisbane on the 25th of May and concluding in Sydney on the 8th of June. There will also be an online component. To find out more about the event and register, please reference the details you can see on your screen now. Well, thanks again, Linda, and I look forward to finding out more about this subject at the SMSF Professionals Day.
And thank you, Darren. Have a good day.